Hi, welcome to HostAfrican, where we discuss web hosting and entrepreneurship and how it relates to business, the individual, and its general role in society. I'm Ashwin, your host. In today's episode, we've got Andre Bothma, a tax expert and owner of Irhafu. Andre, how do you do? Interested to be enlightened by your tax expertise, not a particular strength of mine, so I'm curious to hear where your insights lead me. My first question for you, sir, is I split the knowledge I'd like to acquire from you today into two kind of sections, right? The individual and entrepreneur. You can think about them as two entities, perhaps. To start, could you break down like the basic tax responsibilities of an individual? Like how should someone just starting out their career manage their personal taxes?
Okay, so that's a great way to start because essentially a business is separate from an individual, so a separate registration. An individual, most people, they either finish high school, they finish university, and then they go into some kind of a job, and whether it's in a creative space or in a corporate space, they would get an RP5. So an RP5 is just a thing that says this is how much you earn for the year, and the employer would deduct pay as you earn from that, and then you just submit your tax return. But when you're that early in your career, usually your income is below the income tax threshold. So likely you wouldn't get maybe an RP5, it might be an IT3A, or it might be work that is sporadic. Maybe you're a waitress and you earn tips, and so usually that income is still below the threshold, 100,000, and then you are still required to submit the tax return to SARS because you earned money. But usually if you fall below the threshold, a lot of people don't even bother to submit. I still think it's a good idea to submit your tax return regardless of. So kind of like a good idea is to, once you finish uni, once you finish matric, register yourself for income tax. Like there's nothing quote unquote wrong to do that. And your obligations as an individual changes depending on the type of income you receive. If you mostly, or let's call it 100%, if all your income is in employment, you pay as you earn on a monthly basis. The employer basically deducts that from your salary. So you get the after-tax amount. And then your responsibility is to submit your tax return. Your employer will upload the RP5 to SARS. And then your responsibility is just to submit the tax return. Those people also get auto-assessments. So SARS will sometimes auto-assess you if that is the only income that you have. We see that there is this drive on SARS' side where they try to make the filing for individuals earning salaries automatic. In the other camp, you have everybody else who's earning income in different ways, but not as a business, whether it's rental income, interest, commissions that's not an RP5, income from different sources. They have to also submit provisional tax returns. And that falls twice a year, once in August, once in Feb. And that is to pay additional tax on the money that you receive in addition to employment income. And so that's the type of, that's the individual side of tax obligations.
I mean, with the individual side, well, not the individual side, but just thinking about what you said now, I suppose we could categorize people trying to do side hustles, or maybe people's they're an affiliate for some company. Would they be in the second camp, like where they need to submit their taxes twice a year? Well, it's Feb and August, you said, right? If they don't make the required amount, let's say they make 3K or between 3 and 6K a month, like would they still need to submit taxes for that, assuming they don't have any other employment either?
I mean, it's a good question. This is a philosophical question more than an actual tax question. Does SARS know about you if you don't have a tax number? And that's an interesting question. So from my side, what I see on the practitioner side is if you have a tax number, and you tell me you did work or you did do some work in the last year. My responsibility is to make sure that I ask you, okay, what did you earn? And then I submit that to SARS. It's not my prerogative to enforce compliance. So I can't go and tell people, listen, even if you've earned 3,000 to 6,000 Rand a month, even though you're below the threshold, the rule is you submit the tax return. The obligation to submit a tax return is on the individual who's responsible for their own tax. So there's a very nice piece of legislation. It basically says every taxpayer is responsible for his or her own tax affairs, and so whether you submit your tax return or not is your quote unquote legal responsibility. Submitting, whether even if you're below the threshold, that's a good thing to do, because SARS, if you have a tax number, may see or may consider that you have to submit and you did not submit, and so there might be an admin penalty for not submitting. You can ask SARS to write it off, but purely because it's a once a year thing, or like you said in the second camp, there's the 2 submissions, the provisional tax side. There's not admin penalties on provisional tax returns, but there is on the income tax return. I would say my rule of thumb is submit even if you think you shouldn't or don't have to. Rather err on the side of caution than just not submitting. Because I've had cases where people don't submit for 3 to 4 years, and then they come to me and say, Andre, I need help, and then we have to catch up 5, 6, 10 years. I've had cases of filing 15 years of tax returns for people. So that's just not having a track record. So it's just better, because the problem accumulates, and especially if you start earning a lot more money. And now we're not talking 3,000 to 6,000 Rand a month, but we're talking 30 to 60K a month.
Okay, quite interesting. I mean, I don't want to get into the philosophical side of it, like you mentioned, but I mean, just a last question on this particular topic. But where then is your responsibility as a tax practitioner then? I mean, if the responsibility to submit one's taxes is obviously with the specific person, like what is your reputation or your work or business, is it not entangled or somehow related to what the person does? Like if they're not compliant, doesn't that affect you in some way?
So this comes down to that idea of you can take a horse to the water, but you can't make it to drink, right? So my role, and has been on social media for such a long time, since 2018, is to educate people that this is how you submit the tax return. This is how it works. This is how SARS works. This is how so and in order to do taxes for people, you have to belong to a corporate body, or a recognized control body. So whether it's the SA Institute of Tax Practitioners, so SAIT, or you belong to SAICA or SAIPA, is that when you belong to those bodies, you have to follow kind of their code of conduct. And if you have a client who's non-compliant, if they come to you asking for help, you are supposed to help them in that follows the code of conduct, which is the rules of ethics. But we can only submit as fairly and accurately as the client wants to submit fairly and accurately. I've had a situation where a client wanted to told me about the rental income, and I probed a bit more. And so we are trained to ask the right questions. One of my questions were, did you sell any of your properties that you've had in the past? And the answer was yes. My follow-up question is, did you declare the capital gains? The answer was no. And so then my obligation as a good tax practitioner is to then say, well, we have to declare that to SARS. Okay. But I cannot make the taxpayer declare it to SARS. So it's then in the client's best interest, or in a company's best interest, if that taxpayer does not want to declare that, it's better to let that client go. It's better to say, fine, you do your own thing. we are not going to take you on for that risk of not declaring that the properties that were sold. So our responsibility is to submit the returns according to the information that we are provided. But our responsibility is not that of a police officer that says, well, you have to comply. It just can't work like that. Compliance is voluntary. We're not a country where it's voluntary compliance. Sure, you get penalized if you don't comply, but it's still voluntary, which means that it's still people's choices whether it's not a fully enforced. Like you don't see people being jailed for not submitting tax returns. Maybe for tax evasion or gross tax evasion, there could be a case like that, and you do see cases of that around the world on gross tax evasion as a thing that people get jailed for. But non-compliance is penalized. I think that's a reasonable take.
Okay, yeah, quite interesting. I guess that was mostly for my own benefit and curiosity, just trying to figure out like how insulated you are from any clients or potential clients, their wrongdoings, or I wouldn't say wrongdoings, or non-compliance. Let's say that rather, their non-compliance. So moving on, then many people kind of feel overwhelmed when it comes to taxes, and I think that has to do with it's a lack of knowledge surrounding it. Like, what are the first few things you think the average person should understand about taxes? So it's not something that they tend to avoid or maybe put off because they aren't sure. I mean, my thinking is that if you are aware of how something works, it's easy to kind of finish or complete the task, right? But if you aren't sure, you procrastinate, you avoid it, you whatever the case is, right? So that's basically where the question's coming from.
Yeah. Well, let me put it this way. I'll bet on, I'll bet my 2 cents that if I go to Canal Walk and I'm going to be walking around with a lav microphone, and I ask people, do you know how your personal tax works? I'll bet you most of the answers will be no. Maybe people will have an idea of I pay this much pay as you earn, or, I'm up to date with my tax returns, right? So people will have maybe a rough idea of whether they're compliant or not. But people, let me put it this way. Tax is not in people's periphery. Tax is in people's periphery once a year, and it's in a specific period of time, which is between July and end of October. So for July, August, September, October, so for 4 months, you are hyper aware that you need to submit your tax return, right? And if you've done it, it's done. Outside of that, people hyper focus on all their other issues, what they want to eat for the evening, where they're going to play golf tomorrow, whether their kid has enough stuff packed in his school bag, whether they are doing a fine job, and annoyed by the previous client that they just had. That is what people focus on. Tax is tax is always a lagging factor of every financial decision that you make. Always. When you work out, that's the first order of consequence. You are working out. You feel tired, you feel sore, you don't really want to work out. That's first order consequence. The second order consequence is what you feel like afterwards and what you look like several months down the line after working out a lot. So tax, when you make a financial decision, tax is always a second order consequence. We don't notice it. We don't realize it. So I don't expect people to understand their tax situation. That is not unless you're in the profession, unless you do tax as a profession, or you're in accounting, or you're in some sort of, or you have a business that's paying VAT every month. Now you pay as you earn every month of your employees. Now it's way more in the periphery, right? You are more aware of it. But the average person is not going to be hyper aware of how much tax they're paying, what their tax is doing, whether they're compliant or not. It's just not there, right? They think about whether the steak is well made at the restaurant. They're not thinking about, and it's not sexy. It's one of the, tax is taxing. Like that's where that's where one of my taglines come from. It's not a, if you want to start a sexy business, just go on OnlyFans, right? But it will always be around, right? Death and taxes. So it will always be around, but it will never be on people's minds all the time.
Okay, I mean, I'd say that's true because, I mean, as you're answering, I kind of saw myself in your answer where it's like I'm only paying attention to it during this period of time, right? So, I mean, that makes perfect sense. But I mean, on the plus side for you, I guess that because taxes is probably always going to be around, I guess you always have some sort of employment, whether it's your own company or some other body. But yeah, that's pretty interesting to think about. I want to shift to entrepreneurs. What are the main differences between tax obligations for an individual versus an entrepreneur? And thinking about entrepreneurs, I mean the small to medium business owners.
Yeah. So when you're an individual and you're a sole proprietor, you would still have your provisional tax that you need to do. And even a sole proprietor, so one person business that's not registered on CIPC, they may have employees, right? So they might have to register for pay as you earn. So you're still a business. So if you're a sole proprietor and you're an entrepreneur, you're just not registered on CIPC, you would still have to submit pay as you earn returns because you have staff, if you have staff full time, and you have to register for VAT if you hit the threshold. So individuals aren't necessarily completely out of this, but let's let's say you do have a registered business with CIPC, your obligations increases basically 5 to 10-fold because now you have to do the company tax return. The director of the business or the shareholder will also have to still submit their personal tax return. You have the company provisional tax returns. If a company has staff, it submits pay-as-you-earn returns. If a company hits the R1 million threshold, or it wants to have tender contracts or business-to-business contracts, it needs to be registered for VAT. So you're looking at going from an individual only having to submit once or twice a year, whether you're a provisional tax or a normal taxpayer, to having to submit almost 6 pieces of compliance: VAT, pay-as-you-earn, company provisional tax, personal tax return, company tax return. And so the amount of compliance, and this applies whether you're a small business or a medium business. And small business, even if you did less than R1 million of turnover, your obligations is dependent on the complexity of your business. If you only have freelancers working for you, you're paying contractors and they invoice you, so they're not full-time or they don't work for you a certain amount of hours, they can invoice you, they might not be on your payroll. But the moment you have people on your payroll and the moment you are VAT registered, all of a sudden you have monthly tax obligations, annual tax obligations, provisional tax. So it just multiplies basically when you're an entrepreneur.
I'm just trying to equate being an entrepreneur to being an employee, because I mean, with all these types of compliance, right? It's I mean, to an uneducated ear, obviously mine now, it sounds like it's almost a deterrent, right? I mean, wouldn't they? My understanding was that there'd be a bit more benefit to being an entrepreneur than being an employee for a company. But I mean, with all these compliance that you have to take care of, doesn't seem to be the case. But is that an accurate assessment or no?
I mean, it highly depends on the type of company that you're building, the type of entrepreneur that you want to be, or the type of entrepreneur that you're heading towards. And I'll put it in this way. I separate companies into bands. The first type of company, first type of entrepreneur is building a lifestyle business. A lifestyle business might have a small number of full-time team members, or it's just that one person doing everything in the business, or you have what you would call a performance-based business, a lot of team members, a lot of full-time staff, and there's a lot going on in a performance-based business. With a lifestyle type business, you can do things in such a way that you don't have to submit VAT returns as long as you stay below 1 million. And some people purposefully stay below the 1 million threshold in order not to have to register for VAT. That's a real thing. Some accountants even advise doing that. Some accountants will even go as far to say, oh, did you do 1.5, or if you're closing to that figure, open a separate entity so you don't have to do VAT returns. It is avoided, right? And there's another reason that I'll tackle just now. With pay as you earn is required when you take a salary as a director. So you take director emoluments, or you take director distributions from the business, or you have full-time staff. When you have full-time staff, the issue or staff that works for you a certain amount of hours per month, because there's labor law requirements where you have to register for pay as you earn, that increases the complexity of your business. So if you have a lifestyle business and you want to keep things simple, you would more likely work with people from Fiverr and Upwork, and with contractors who work for you only for a couple of months, but maybe 2 or 3, maybe 5 hours a week or something like that, and effectively reducing your requirements to your tax obligations as an entrepreneur. So the amount of compliance that's necessary for you depends on the complexity of your business and how. But on performance-based businesses, the other point that I want to make is that is why entrepreneurs, the moment you're in your business, you registered for CIPC, that is the moment in which you no longer do your own taxes. You hand that off to an accounting company or to a tax professional, because if you're not aware, now you have to be even more aware. And that's why companies don't do their own taxes. They either do it internally using an internal accountant, or they do it externally using an external accountant. They do not do their own obligations.
Okay, that's pretty interesting. You mentioned something, and I mean, I saw this in one of your videos as well, about companies trying to stay below the 1 million threshold, right? To avoid, I think it was VAT, correct? Yeah. So is the benefit of that noticeable? Is that something you would advise as well, or not? Not really. Is it situational, perhaps?
No, definitely not. Creating two separate entities in order to avoid VAT it breaks all kinds of business principles. Because if you're building a business, you're building one business. Who's going to build two businesses? Right? An accountant that just wants to avoid their client having to submit VAT returns, that is a very shallow-minded way of looking at the company. You must ask, what's the company doing? If a company wants to do cool stuff, you want to grow value in one company, you're not going to split it up unless you're going to the moment you create separate entities is if you are providing different types of services that you want to put. It should be a business decision. Business decisions shouldn't be driven from a tax point of view. It should be driven from a business point of view. If I'm selling cars in company A and in company B I have a car rental, that makes sense. That is two separate entities. But I would never advise splitting a company just to avoid VAT registration. Like that's amongst one of the stupidest things you can do as a business owner.
Hopefully, any of our listeners considering that, hopefully they take your advice under consideration.
let me explain why. The moment you have a second company, let's say you have a shareholder of company A, The moment you become shareholder of company B, it's still your company, right? You immediately lose any small business company benefits in company A and company B. So if you qualified for small business corporation, the lower tax rates for SBC, small business corporation, you immediately lose that when you open a second company and you're in a shareholder of the second company. The second thing is when you have two companies, you have to do two sets of financial statements. You have to do two sets of company tax returns. You have to do 4 provisional tax returns instead of just 2 provisional tax returns. If company B then gets employees, you have to do pay-as-you-earn returns there. You have to register for VAT. If that one gets close to $1 million, the accounting fees therefore doubles or almost triples. It's just right. So what you gain is you don't have to register for VAT. What you lose is potentially your SPC status, and you just increase the number of things that you have to do from a compliance perspective. And it's another set of books that you have to do. It's another company that you have to open on QuickBooks or Xero or Stub or any of these accounting platforms. The second company might have a different trading name. So now you might have to get different branding for company B. You have to get a different website for company B. It's not a wise decision.
I mean, it does sound like a lot more work, but what's the misconception that people are laboring under for them to think that this is a good idea then? I mean, they must be thinking there's some benefit. I mean, nobody would go into that thinking, well, I want to double my payments, triple my payments, and do twice as many workers. This seems like the right thing to do.
Let me put it this way. If you're not VAT registered, right, and the company is doing less than $1 million in turnover, the average accountant is going to charge between 1.5 to 2.5 per month. Your accounting fees are somewhere going to be between 15 and 25K a year for a non-VAT registered company. The moment you become VAT registered, the fees triple, because now you are forced to do monthly to bi-monthly bookkeeping. You are forced to do VAT reports. You are forced to submit bi-monthly VAT returns. And some businesses are output VAT focused. Service-based businesses are like that because there's no VAT on staff, right? Staff pay as you earn. They don't pay VAT. So if you're a service-based business, all of a sudden your prices have to increase by 15%, or you're going to lose 15% as a result of having to pay SARS, the VAT. Or you can be an input VAT-based business, which is where your purchases is what is generating your income. And so the registering for VAT does increase the amount of work necessary to run your business from a compliance perspective, because now you have to do better monthly bookkeeping, VAT reports, VAT submissions, and it does have an impact on your top line if you're an output VAT type business, if you're a service-based business. So registering for VAT doesn't it does have that is why if you're a service-based business or if you're below the threshold, it's kind of this idea from you try to teeter on that point of almost registering, and then when you do have a very good year and you're in September and there's still 5 months left of the year and you're already at 850, that you absolutely smash it. You try very ham in that year to hit maybe 1.5 million, because then you're prepared for the VAT. And now you can let your clients know, hey, I'm VAT registered and these changes are being made. But that is the reason why. It's because the compliance work and the accounting work is now basically increasing dramatically.
Okay, nice. See, I wasn't aware of that. I thought maybe there might have been other benefits that small businesses maybe have or secure while being not VAT registered. But I mean, doubling or tripling your expenses, I suppose, is not something that that people kind of take lightly. Just interesting to see the way that they try to kind of maneuver out of things, you know. When an entrepreneur starts a business, right? What are the initial steps they should take to ensure that they're handling their taxes correctly from the get go? And I don't mean I mean I know you suggested early on, or kind of said early on, that you want a tax expert kind of to handle this, right? But let's say someone starting a business, they obviously earning under 1 million a year. They're doing everything themselves. It's lifestyle business, like you mentioned. What should they know, at least, let's say, for the first 3 months until, or 2 months, or whatever the case is, until they're able to find a tax expert to help them? Like, well, what are the tiny things they can do?
Yeah, I think to start off with, a good idea is just to ask yourself whether you're going to be trading in your own name or opening a company on CIPC. I think the benefits of trading in your own name, at least initially, is you can test your idea before registering on CIPC. You can see whether you have consistency, because a lot of people think you need to have a business registered on CIPC in order to run a business. That's not true. You can trade as an individual, right? So you don't have to register on CIPC to get started. But let's say you have the CIPC registered company, you decide this is what I want to do. The first step is to immediately open a business bank account so that you can separate your personal finances to your business finances. And then you have to work out how much personal money do you actually need from the business in order to allocate yourself some kind of a salary. And whatever's left in the business is what is for the business. So that's where all the business expenses goes through and whatnot. So that would be a start. The next thing that you must do, so you've got the registered business, whether it's with CIPC or trading in your own name. You've got a business bank account or a sole proprietor account. FNB or any of those banks allows you to create a separate account from your normal day-to-day account. And then I would say registering on anything on an accounting platform like Xero, Stub, QuickBooks, Sage. It allows you to professionally send invoices out and connect your bank account to the accounting platform. That is if you do those 4 steps, then I'm willing to work with you. You know, if you don't do those steps and you've got multiple bank accounts, or you use your personal account to do business with, that's much harder to reconcile because you're mixing business with pleasure, etc., etc. So the first steps is knowing what structure are you trading as, 2, separate bank account, 3, registered on an accounting, some kind of an accounting/bookkeeping platform.
How far can those steps take you before you absolutely need to get an accountant or a tax expert?
I mean, the Companies Act requires you also have CIPC obligations. So after you've registered your business with CIPC, you have to file your beneficial ownership submission. And goodness sakes, nobody knows how to do that. Nobody, unless you work in CIPC or you have a CIPC business, nobody knows how to do beneficial ownership, right? And that's required I think 3 months or 1 month after registering. So that's the thing that you already need outside help, because you won't know unless you run a CIPC type of business. I would say you need to get, in order to do anything tax related, you need to activate yourself as a public officer or a registered representative with SARS if you've got a CIPC registered business. You won't also know how to do that. So tax is a thing where, let's say we register the company, we are going to register a company for you, and now we have the business. When it hits August, because that's when the first provisional tax return is due, you will need to have a tax person or an accountant, because if you're going to be trading from now until then, how are you going to know what to do for your provisional tax in August? So it's about when those obligations come through. The Companies Act requires you to have an accountant. The moment you register a business with CIPC, you need to have an accountant who's going to do the books, either internal or external. There are people who have traded, who have companies that have been existing for, Andre, I've had this company since 2021. It's been trading on and off. I'm like, are you an accountant? Like, do you have an accountant? No. Oh, so who did your accounting? Oh, nobody. Why not? And then you get the other side. No, I've been doing my own books for the last year and a half. Oh, okay. What does your business do? And I'm not gonna pick on any specific industry, but let's say you're a musician, okay? No, I'm a producer of music, and you've been doing your own books. Yes, I've been doing my own books. Now, mind you, this is a CIPC registered business. This does not apply to sole proprietors. Sole proprietors have no accounting framework. So a sole proprietor can just do their bookkeeping and submit the return, but not a company, a CIPC company. Oh, no. I've done my own books for the last year and a half. But you're a musician. Yes. So you're not an accountant. No. But you've done your own books. Yes. But you're not an accountant. Like, I don't understand what people mean by I've done my own books, and then I ask them, the follow-up question is, are you an accountant? No, I'm a musician. You've not done your own books then. I guess that answers the question.
Okay, no, because I mean, I'm sure you're familiar when starting your own business, you kind of have to don lots of different hats. But well, I mean, folks, you heard it here first. Like, accounting is not one of the hats you should be donning. So, yeah, yeah, it's well, I mean, I guess that kind of settles it then, because obviously you'd like to save as many costs as possible, try to do what you're able to do before branching out for experts in each specific like for each specific requirement that your business needs. And that's kind of why I asked the question, like, what can new entrepreneurs do, like, from the get-go. But I think you put it into perspective nicely.
I mean, let me put it this way. When you register a company of CIPC, you get the company registered within 48 hours. In order to deregister a company, there's a list of 7 steps that you have to go through, and you don't even know whether CIPC is going to do the thing that you're asking it to do. And it might take you 2 to 3 years to do that entire process, to go through the entire deregistration process. So registering a business, 48 hours. Deregistering a business, who knows how long it takes. So when you register a business, usually the question I've got for the business, for the person who wants to register a business, is whether they already have a contract, whether they already have a client, whether they already have done some business in their personal name. And usually the markers that I'm looking for, and whether I'm going to do their books or not about their business, is whether they have what I would call business continuity. It means basically, what was your turnover for Jan? What was your turnover for Feb? Kind of like this idea of, I'm making money, okay? If you're not making money, don't register a CIPC business, because with that comes an accountant, yeah? Like, we already established that the business below a million, is going to cost you about 1.5 to 2.5 per month. So where's that money going to come from if you're not making sales, if you're not making revenue? So the bare minimum is whether you have continuity, whether you are making sales, you're making some money, then it makes sense. Sure. And continuity means not just for 2 or 3 months, I'm talking 6 to 12 months. Can you do this? And if you have a contract for 12 months, great, because then we know you're going to have revenue for 12 months. But if you're just testing out an idea and you're not thinking about getting business partners, there's a board. I'm going to do a video about business partners this week. Is if you're not thinking, if you want to start a business by yourself and you're just starting out, you have you're completely new. You have an idea, you want to start a business, test the idea as a sole proprietor. You can do a lot of things as a sole proprietor before you register the business, before you register with CIPC. You have there's nothing stopping you from doing that.
Okay. I see we don't have a lot of time left, so I do want to touch on a couple of other things before we reach our marker. It's slightly unrelated to what we were just talking about, but I guess you're gonna need to, I'd say, correct me where I'm mistaken here, but part of what I want to say understand is that there's certain tax breaks that individuals can apply for in their workspace. Like I'm not sure if these are individuals or entrepreneurs, people who own a company. But let's say you have an office space at home, right? And you can kind of claim for a tax break on the internet that you're using or any equipment that you need to kind of to run your business. Like, how does hosting services and related subscriptions, let's say software to Photoshop or maybe even accounting software, are those things included in that tax break?
Yeah, so the basic rule of thumb is if you have a business in your own name or you have a registered business with CIPC, you are generating an income that's not employment. So let's say you're not a full-time employee, you're a business or you're a sole proprietor. Whatever you are spending in order to generate the income, you can deduct for as business expenses. For example, this microphone, I can write it off against, let's say, my YouTube revenue. Or if so whatever you're using in order to run your business. People confuse the definition between what I can and can't deduct in my business as expenses. People get really confused about this, but the answer is very simple. If the expense is for yourself, you're either eating, you're watching Netflix, you're going to the gym, you have medical expenses, you're taking your wife on a date, any personal, your personal insurances. Anytime it is related to your person, your personal well-being, your personal entertainment, those type of expenses, they are not allowed. Everything else is likely business related. And the ones where people get messed up is travel, vehicle related, and home related. If you travel, there can be a business component, so then you have to apportion which portion was business related, which portion was private. The same thing with traveling with a vehicle. Is this vehicle mostly a business vehicle or is it mostly a personal vehicle? The same thing with using a home office. If you have your own business, which portion of the house are you using for business purposes? But for most other expenses, there's a clear distinction between this is for the business and this is for personal. But people like to muddy the waters. But anyway, when it comes to the part of claiming expenses, like hosting a website or whatever, that you can deduct those expenses. What is more important from saving on tax, especially if you're an entrepreneur, if you're running a business, is the structure, the tax structure, depending on how much profit and how many business partners, and depending on the type of business that you have, that will tell you what type of tax structure makes sense for you in the beginning. And it will save you a lot more in tax than questioning all the little expenses that you have on a monthly basis. That is not the clincher of what's going to help you pay less tax. What's going to help you pay less tax in the beginning is the right structure, and taking the right amount from your business as a salary and leaving the rest in the business, etc., etc. So, but yeah, I think that does cover the question to a decent extent.
Okay. I think I was definitely one of the people who was slightly confused on that as to what you could claim from and what you couldn't. I mean, just listening to the way you described it, I mean, like if the structure is the primary thing that's gonna, let's say, offer the most benefit, I think it's kind of like focusing on the you wanna lose weight and you're trying to figure out which method of training you should be, or which sport or whatever the case is you should be doing. And I mean, everything will obviously have its benefit. The primary thing is that you kind of get moving, which is which is kind of how I think I was approaching the tax break kind of issue, right? I'm looking at all these minor details, but I mean, it accounts for like a small percentage of what actually makes a difference, if that makes sense.
Yeah, I mean, at the end of the day, I think getting yourself for me as a tax practitioner, tax professional, accountant slash person, it is more important for me that what you do as a business works, because because tax is again, it's a lagging factor of everything that you're doing financially. It's not the first thing. The first thing is, are you making money? Are you making sales? How's your marketing? And so then, if you prove the first fact, if tax is a lagging factor of all your financial decisions and you've had a good year, my goodness, then you're going to need a tax person. Then you should be thinking about your tax, right? But I have had cases where people come to me and I don't blame them. I'm the person which people usually come to because I'm I'm everywhere on social media, right? But if you made under 100,000 and you've got a business, you're an entrepreneur, you made under 100,000, I'm not going to shoot down what you're doing as a business, but I'm first going to ask you, can you make more money? Solve that. Don't think. You can think about the tax. Just get somebody just to keep you compliant. You're still small enough. Don't worry about. Sort out your business first. Business is two things. One is sales and marketing. Get that right. Sell whatever you need to sell. Put yourself out there in whatever methods that is, and then convert whatever comes to your door. And then you have to deliver whatever you're selling, whether it's a product or a service. Then only you look at operations, and operations is anything from accounting, it's hiring staff, it's legal, it's all that other extra things, customer service and whatnot. You're not going to have any of those operational needs if you don't have the first two. So tax is not a thing that should be, again, if you're a dog, tax is the tail. So that kind of, and that's my approach. My approach to it is, the dog must bark first before you worry about whether the tail is wagging.
Well, that's a really cool analogy, I would say. I think it describes it pretty nicely. It's I mean, what a fun way to think about it. I mean, I have a couple of more questions, but I don't want to hold you too long. I'll ask one more. In terms of financial planning, right? Or what steps should entrepreneurs take in their first year to set themselves up for long-term success?
Entrepreneurs, financial planning, I think starting off with building some sort of emergency fund in the business is always a good idea, because with extra cash reserves, you can make hiring decisions. You can do expansive things with money that you've saved up. That money can also act as a tax reserve in case you have to pay provisional tax and all those type of things. In the first year of any business, I would ideally look at, is my pricing right according to how much money I want to make in the first year, or after the first year. You look at what your pricing model was. You look at what revenue targets did you hit. You look at how much money did you save, etc., etc. Because if your pricing is bad, let's do a thought experiment quickly. If you want to do R1,000,000, right? You want to hit that VAT threshold. Like, that's a nice goal, okay, as a business. But what you're selling, the price is 500. You need to make 2,000 sales, or you need to find 2,000 clients with a 500 Rand business. If you have a business that sells something that's worth 5,000 Rand, now you only need 200 clients or 200 sales a year. Kind of like the financial planning for a business is more related to how much money do we have? What can we do with it? If we don't have money, how can we make money? So and like, what's the targets? It's no help you have a target of 500,000 if you're not doing 30 a month yet. How are you going to do 500 a year? So you kind of drive it down to, okay, if you need to make 10,000 Rand, what are you selling, and how many sales do you need this month in order to make 10,000? So it's kind of like having those, and it's all it fix revenue first, because a lot of businesses, Uber and all these big businesses, people look at that and say, yeah, but this is what we want to be like. We want to be the next Facebook. You don't want to be, you're not. That is not how small business works. Because small business is like, what are you selling, and is there a market for it, and are the people paying you for it? A lot of big businesses, big ideas, it's just a different world. Now we are not talking now about what I would call you're basically building a performance-based business. You're going the route of which you're going to need investors and a lot of capital. But if you're in business for yourself, if you're starting out or you want to have a business partner, looking at what revenues you want to make, what are you selling, for how much you're selling it, and putting some money away, and also asking yourself, how big do you want to be? Do you want to have a lifestyle business that maxes out at like 15 employees, 12, 13, 15 employees? Or do you want to build a much bigger business and turn yourself into a performance-based business? But that's a different goal. So what you do in your first year, it really depends on what type of business you're trying to grow.
Okay. I mean, as with many of your answers, I think there's a lot more nuance to handling taxes, accounting, and just your financial planning in general. Definitely the perspective I came into our conversation with was that it was a bit more black and white, but obviously an uneducated perspective. Listening to you share your insights kind of I wouldn't say set me on the right track, but definitely broaden my horizons to not think about it so plainly. Definitely a complex profession to be in from where I'm sitting right now. But yeah, Andre, it's been fun getting to know you and what you do. I definitely like to pick this up again sometime in the future. But yeah, that about sums up our time together. As usual, for any and all of your hosting needs, feel free to check out our website. We're also on Facebook and LinkedIn if you're into that kind of thing. You can also find Andre online. Check out his YouTube page for lots of current and relevant tips on taxes and how to approach them. Also give him a follow on X, formerly known as Twitter. If you have any questions you'd like to hear about, feel free to reach out to us. We have all the details of today's episodes in the show notes. Thanks for listening to Those African. Goodbye.